Hey everybody, this is Marsilio, and thanks for joining me for a quick take on the markets. Video's out a little bit later than usual. Two reasons. One, it's making braccio, Italian-American stuffed meat pasta dish. Well, actually, not pasta, but sauce goes along with. And that took some time, but it was really good. And but more importantly, we're just got new information on markets. I thought the video would be more helpful if we included it. And by that, I mean this changeover from second quarter to third quarter has more pivot changes than any other except the new year. So we've got new half-year pivots in play, new third quarter, new monthly, and these are going to guide my decisions going forward. And so I want to stay flex. I'll give you what my preferred take is, and always open to alternative scenario, what I'm wrong, what I'm looking for. And this is, I explain things so you know what I'm thinking, and tend to, this analysis tends to be more right than not. So in any case, I don't get every wiggle. That's very difficult, and it's very difficult to predict economic news or corporate earnings relative to expectations. So here's we have new quarterly bars on S&P. This is where I was starting. New monthly bars, and of course weekly bars. The weekly bars look a little bit more of a concern, especially on a few things, and I'll get to that in a minute. But first, on the review, I thought there was going to be down pressure into Wednesday, Thursday, which actually was the case for Dow and Russell, but not, let's see, we need to go to a daily chart there, but not NASDAQ or SB or even Bitcoin formed their lows of the week on Monday, and then we're generally up from there, although there was some kind of higher lows in there. What I did get right is a couple of intraday calls. Tuesday was really thinking that NVIDIA would lead the turnaround, and that was up massively on Tuesday. One of the better intraday plays of the week, just to have that much gain. And then on Friday, I did think pros would be locking in gains, although even I was a little surprised at how weak it was, so I'm going to address that. Was that real or was that fake? End of the month could have been fake, but if it wasn't, what are we watching for in the week ahead? Then the other thing I really nailed was a great put trade on FXI. I kind of went out of my way to highlight this, and regular viewers know I do not do this lightly. And so it was up against its yearly pivot, and I thought the particular event that was on play Thursday would hit something global, something a little weaker, and I saw the chart. So this was technicals and timing for the win, and these puts were up. Well, I had no reason to go out further, so these were well over 100% gain on those puts expiring that Friday from entry on Monday into Thursday. The other thing I've gotten right in a sense is that in recent videos, I said, we're heading to summer, we're going to see range trading. And I did mention RSI getting up there, gets sold, RSI getting down there, get bought. It wasn't really based on RSI, but pros were selling the highs, just in terms of close levels. There's the ES 4-hour close, and even on the daily chart, we look at the S&P there was selling at the highs, yeah, almost exact on, well, that's on QQQ and similar and some others in terms of the close high level. Here's SPY. So, okay, that's the review. Now on to some charts. So really the weekly chart, there are a few weekly charts. They're like, when are pros going to start selling this? And this is S&P. And I've been pointing to this yearly R2 every day for like weeks. Seemed to have cleared, and all of a sudden on Friday, kind of back in play. Still support, but a rejection here could be more bearish. I mean, really, it had a weak attempt to lift from it. So a fail would mean back down at least, a mild pull. Now we could easily test the 20-minute, no big deal. In fact, there's room for a larger pullback and still be complete in a bull market uptrend. But still, I'll be watching that yearly R2 level. The other weekly charts, that suggest a top. First of all, semiconductors have topped on yearly R3, and that is not the first time I've seen this. R3 or S3 to stop a parabolic move or a crash. In this case, it's yearly R3. And is that enough to cool the AI momentum for a while? We shall see. I'm actually very bullish on AI. I think the productivity and change in the economy have just begun. I'll say more about that in a little bit. But for now, the move has stopped cold on yearly R3, and that's one reason why I trimmed substantially on my semiconductors that day and was buying back last week. So we'll see if that's been the correct move. The other thing is NASDAQ. I'm going to go to another pivot system that I use, actually, that I don't mention too much, because if you're new to pivots, it's already a lot of lines. And then if I put this on there, it's like, oh my gosh, that's just a little overwhelming. But DeMark yearly R1 was up here at the high, and also 2 week buying candles on NASDAQ. I've seen that before too. That's like kiss of death. Or not. It really invites selling on the for the coming week. But if you look at the quarterly and monthly charts, they look fine. But these kind of 2 week buying bars up at Toppy and RSI like that, I have to say the bears do have a shot here. But it was also last day of the month. It can be fake week, or it can be meaning it comes right back early in the session and off to the races first day. Or if it's for real, we're going to see a few other signs. Now, here are the new pivots on the continuous features, and this is one reason. So look, this is a strong bull market. There's nothing worse than being constantly worried about a top in strong bull market. It's just the wrong question. The right question is how to make the most money from this environment. It said, where's the top? Where's the top? Where's the top? Because there's going to be pullbacks. There's going to be shakeouts. And until we see, especially if all 4 main indexes are above all pivots and above all moving averages, it's not quite the case, but show you some developments in charts that it's just not the time to argue with the bull. So ES could go all the way down. This is the continuous level, 54 and change level, and still be above all pivots. Could just pick right back up, work off the RSI, pick right back up. NQ, similar pivot, 19,600. YM opening above, even though it was below pivots for a time, it actually on the continuous contract was cleared, and that really helped alleviate some of my concerns, because I thought, well, if 2 are above, 2 are below, it's really a toss-up. But if Dow is staying above its pivots level, then it tips the scales in favor of the bulls. And look at Russell, below its second quarter pivot for a few weeks, but opening above key levels there. So all of a sudden, above all pivots, above all moving averages. Not the time to argue or side with the bears, in my opinion, until we see something like that change. The other thing is VIX been very reliable in the market. And when VIX is not worried, I'm not worried. And we did see a minor tag of the band. But these things don't happen every day. But often there can be divergence. But what really matters is the change of pivot and moving average status, which we don't have yet. That said, something else I like to watch VXX is drop below its yearly S1 couple times, may recover, something I'll be watching. And the smart money tell HYG, HYG can kind of look weak for a while, and all of a sudden stocks get the message and it gets slammed. So it could have recovered this second quarter pivot, but didn't. So we'll see that status on Monday at the open. So, but basically, my preferred scenario for this week is that the drop was fake, and we're going to see AI melt up, money just pouring into the AI names. Semiconductors a little pullback, and it's also a holiday week, so institutions may be a little less active, maybe retail a little bit more active, and so the favorites poised to just rally and maybe get a little silly early Tuesday, and then maybe we'll see selling again after that. That's kind of my preferred scenario. Wednesday, short day, half day for 4th of July, Friday, unemployment news. But I'd rather see up this week, and I have 2 data edges that I'll get to at the end that are in play for most of the week, supporting that. And I think the best play is going to be semiconductors, rally. Bitcoin also catch up. I like that as well. And so since we're, and I'll say more about a technical, so we've got a timing edge in play, say more about that soon. And then, yeah, putting technicals and timing. I covered that in a couple of shorts earlier this week, like what an investing view setup would be, what a daily chart active investing setup would be, what a 4-hour setup would be. So it really depends on, the setups really are time frame dependent in my view. In any case, okay. So bull scenario, bigger picture, is we're in moderating inflation with incredible AI innovation. And this can, from looking at the market in the late 90s, this can continue for years as naysayers just watch on in disbelief. But the AI productivity, look, I don't know Python well. I've taken class in it. I kind of know a little bit. With these AI tools, I can write Python code that works. I mean, not something that's a sophisticated business application, but that is just amazing. And more, I'm turning to Perplexity and ChatGPT for any tech support, anything I'm asking, and even personal things, personal questions, personal whatever it is. Even if I want to select a bottle of wine from my cellar and have it be a good drinking window, it's so much easier than Google Chrome. It's just at the tip of the iceberg in terms of what companies. But like the late 90s, who wins the business application is unknown. But the suppliers of this technology, the backbone, they're already so flying, and these can continue, far beyond anyone imagines. And the other thing is NVIDIA is making money hand over fist. So even by Wall Street standards, is totally warranted. So that's the bull case. The bear case, I would say rising rates, political uncertainty, especially creeping in from recent events, and just overdone markets. I am watching sentiment, which is getting down there. And that is something I've used very successfully in the past to be part of turns when it's the one side of the boat is just too lopsided. This is put call. This is weekly chart. We're not at the band yet, which is my official definition of the signal, but it is getting down there. And by the way, I bracket this QE infinity work from home period entirely. I don't really include it in my, is a aberration we're not likely to see again. And I'm more thinking these levels. So there's been a handful of weeks below this. So I do think, a shakeout is a matter of time. Is it going to start immediately or August? August is my preferred, but it's getting down there. And same with the daily. Daily is also getting down there. And the actual tags of the band and reversals have been great stock trim signals, and in addition to VIX and the other way. These has worked really well. And it's not a standalone for me, but it just, selling when the crowd's getting silly and buying when the crowd is really worried. It's a fantastic strategy and really adds, you can use that for investing or active investing or trading. Use this to your advantage. So we are getting down there. It's just how much further are we going to go? I think market could rally to another month or so, early August, and then put in a major top for a kind of a weaker August. But given the levels in play, if we see a big rejection from the S&P, there are two level and change of status in VIX and some other collaborating, indicators, then I'll be like, okay, maybe this is a little bit more important top. So far, we are not seeing that. If anything, the opposite, we're seeing all four main indexes are above all pivots and moving averages. Just not time to be worried about a top. That's how I approach it. Okay, so you got my sense. In the best move of the week, I think, is going to be rallying to semiconductors early Tuesday. Then maybe some selling after that, kind of mixed day. And then yeah, that both of those could be noticeable moves, meaning the rally into it and then a drop in tech after it. Then I'd like to see Wednesday back up, and Friday will be moving on the unemployment, but I prefer higher for the week. So two data edges that I'll get to in support of this view. One, so this is an amazing chart, and it's the kind of thing that even I'm just like, wow, the data of how much the timing factors that I like move the market. And sometimes it's, sometimes it's not, sometimes there's no edge. But I'm going to show you one chart and hopefully explain it without a lot of lingo. And this chart shows this year on semiconductors, this year only, ignore the date slider because I'm just selecting through this parameter this year. See, on semiconductors, the strongest up. And even though it's the strongest up sector by far, the majority of the gains have come in one specific portion of time, the way I measure it. And that portion's in play this week. So end of story. There's actually another event that also suggests to me semiconductors getting silly, mild pullback in, new quarter, retail. Why not? What else are you going to buy? And the favorites. So this, if you're not familiar with my data, I'm using average daily percent return, but in this specific portion of time that we're in this year, semiconductors have averaged 0.6% per day, and all their time, the next best is 0.15% per day. And then these are down here. So it's not a total return, it's an average percent per day. But still, that means 4 times the next best. If we averaged all these three, it would be down here. So the multiple of the data edges is literally off the hook. And I don't think people could realize how drastic it is. But this is what I'm offering. This is what I'm showing. Say, hey, I've got data here that shows this stuff works. And another one that works incredibly well and even more simple than this is a moon cycle that referred to. And here it is again. I even wondered if it would make it through Saturday. This is Bitcoin. And not just looking at moon phase, new moon, full moon, or waxing, waning. Waxing, waning is more important than just new moon, full moon. Everyone kind of got stuck on new moon, full moon. This is moon quarters, shown by the colors. And this edge is working particularly well this year. It doesn't always work this well, but it's working particularly well, delivering again on the long side. And at the very least, so folks, I put out a ton of stuff for free over the years, maybe more so than a very good quality. Actually, I'm not just, I call it musings and wiggles, but I've been at this a long time, and the proof of that is on my accurate take on the markets most of the time, and many weeks where I'm pointing out the best move of the week in advance. Even last week, FXI, one of the biggest drops, cryptos, I was bearish, one of the biggest drops in markets. And so I do this not every week, I try to, but a lot of the time I'm able to put these things together now. So I put all this out for free for years, but I really put a top tier webinar together explaining what this edge is in total simple language, looked at the history. It's not just fourth quarter up. I mean, it is that, but it's explaining no astrology lingo, nothing required, but what it does, how it works in different environments, and even not just bull and bear, but strong bull, weaker bull. I call it nice bear and nasty bear environments, which is new work, by the way. I haven't put that out anywhere else. And there is a big difference based on 50 May status, which is giving that nice bear or weak bull designation. Really quite a difference in the data, especially for cryptos, and a look at S&P data as well, which confirms this is not just in play for Bitcoin, and it's not just futures. It's a very long-term edge. And I explain my take on why it works for so many years. Now, it doesn't work every year in some, but this edge could impact like the I keep thinking the algos are going to take over and this stuff won't work anymore, but it just works over and over and over and over again. But it could have inform your investing lives for many years to come. And so that edge is fully explained and explored. This was the data that was picked up in Wired, and then how to use it in different market environments, and whether you're an investor or trader. And it's available at my site, reviews, positive. So I'll put that link in the show notes. So you have my best moves of the week, my preferred take, the levels I'm going to be watching for in case the bears make a stand or the drop was for real. And that's going to do it. Happy holiday week, and stay just, you could, if I'm doing this, still doing these daily updates. It's not going to be forever, but I'm still doing it for now. So good luck, and good fortune, and eat well.